There's a huge shakeup at the Reserve Bank of Australia, which is going to impact interest rates. In this video, we're going to break down what's happened, how it's going to impact potentially the property market, interest rates moving forward, and who the new governor is. Because as we know, Philip Lowe is on the way out. He's been given his marching orders. Later in the year, he's going to be replaced. Now, this has been a combination of things. They only appoint the Reserve Bank governor for a set period of time, and he's pretty much come to the end of his tenure, which the government can choose to extend. They haven't done that. And a lot of it, there's speculation in the media, was it around some of his conduct during COVID? He'd promised to put interest rates on hold till 2024. 12 interest rate rises later, it hasn't really come to pass. So is he going to be a sacrificial lamb? Is the Reserve Bank going to use him to pump up rates a few times until his replacement comes in later in the year? Let's dive through who his replacement is, Michelle Bullock, the new Reserve Bank governor, the current deputy governor, and what's going to happen there.
Yeah, look, Michelle Bullock, who begins her term in October, has an interesting sort of background, and we're going to explore that. I want to start off by talking about Charlie Munger. He's got a quote that says, "Show me the incentive and I'll show you the outcome." Let's start off with a quote by Charlie Munger, who says, "Show me the incentive and I'll show you the outcome." And the reason I want to say that is there is some concern over whether or not Michelle Bullock will continue where Philip Lowe left off and continue with the tightening cycle. Well, let's look at her background. She has a substantial property portfolio of $6 million, including 4 investment properties. Bullock, who grew up in a country town, rejected the big 4 banks for multiple loans. Her 4 properties include one in Sydney, which is a 3-bedroom home in the West. She jointly owns that with her partner. She also has 2 investment properties in Sydney worth $1 million each, and 2 other apartments in Russell Lee. They've all doubled since she bought them in 2007. Now, her investment properties are funded through Gateway Bank, who's a people-owned bank, and they prioritize people over profits. And Bullock also has a margin loan with Commonwealth Bank. So that brings us back to our quote, which is, "Show me the incentive and I'll show you the outcome." My feeling on this is she has a substantial holding in property. Could this impact her ability to be the governor and really determine the interest rate environment?
Yeah, and we've spoken about this before with the current sitting parliament. Our federal MPs own on average 2 properties each. Of the 151 MPs, 38 have properties in the capital. It's crazy. They own more properties than the average Australian. So it's, again, back to that quote. It's like, well, look at the incentive there to see what they're doing. And obviously the Reserve Bank's mandate is about stability of the economy. Their mandate isn't to worry about property prices, but with property being such a big part of the Australian economy and being obviously directly impacted by interest rates, you could see that she's obviously got an interest to make sure things keep going the way they have.
There are suggestions that Bullock might cut interest rates to inflate her own wealth, given that she has a substantial interest in investment properties in that asset class. Now, such criticism is also applicable with many politicians, as we talked about, having extensive property portfolios, and when they implement policies, it might actually have an impact on property value. So it's very interesting to see, and certainly one that will be interesting to see how things unfold in the future.
I think we all know there's a pretty big cultural norm in Australia to be seen to be getting rich from property. And I think at the situation, given Michelle Bullock's been with the Reserve Bank for a couple of years now, it's pretty unlikely there's going to be massive step changes in the monetary policy. Their biggest target, and one of the criticisms of the Reserve Bank has been their mandate to try and get inflation back to the 2 to 3% band, which is, it's been pretty hard for to struggle for all governments or all reserve banks across the world at the moment.
Treasurer Jim Chalmers also praised Bullock. He said she was the ideal person to move the Reserve Bank forward in their future direction, particularly given her experience. She was the previous deputy chair, so she's had plenty of experience in this role. Interestingly, to add probably a different perspective on where she might move interest rates, if we look at Reserve Bank Philip Lowe, the current governor who will end in October, his salary, according to a Reserve Bank report in 2019, was $911,000 plus $116,000 for insurance. So if they're on these big pay packets, Jaden, do you think maybe this might actually negate what we talked about earlier and potentially mean that they're earning enough not to really worry about what they do with the monetary policy?
So again, it's hard to say they're going to put their personal interests above other people because the Reserve Bank mandate isn't about making them rich. But there has definitely been some allegations that with the Reserve Bank's massive salary, $1 million package, including that superannuation and everything else, that they are a bit out of touch. There was talk about some of his lunches that he's done that have been pretty extravagant, and talking to different business leaders. So I think that could be a big step change, that they're going to try and make them a bit more relatable to sort of the average person, because they have such a big impact. Because that's the other thing that the government's been grappling with, is they're trying to say, and it was sort of famous years and years ago with John Howard saying, we don't try and influence the Reserve Bank, and there was some talk that apparently he helped keep interest rates on hold during an election cycle. The government's been managing that, where they're sort of saying, well, the Reserve Bank's kind of at fault for the cost of living issues because it's causing the rates to go up, which causes the mortgages to go up, which causes the rent to go up, et cetera, et cetera. And the Reserve Bank's saying, well, we're trying to stop inflation, because if things get crazy expensive, if the price of bread, it's like in Argentina, the price of bread's going up by 100%. It's insane over there at the moment. They don't want that to happen, because once it gets in a cycle, it's pretty hard to stop. So yeah, there's a definitely a little bit of finger pointing, but they're hoping to stop that.
And this is where the previous RBA governor, Philip Lowe, who bought a property in Sydney at a discounted mortgage rate, which is taxpayer subsidised, was led to be called out of touch. Lowe stated he supported Bullock's appointment and expressed his confidence in the Reserve Bank being in good hands as they tackle the current inflationary challenges, and really that's front and center for them. Reserve Bank Governor Philip Lowe has said many times in the past that getting inflation back within their target range of 2 to 3% is their main priority. They don't care if the housing market's tanking, they don't care about anything else. If unemployment spikes, they're just looking at that inflationary data. So it'll be interesting to see if Bullock continues with that sort of mandate based on what the Reserve Bank's target range is. So definitely interesting to see what happens in her October appointment. Now, interestingly, the Reserve Bank also has a big change coming up. They're going to be reducing the number of meetings they have from 11 a year to 8. Now, how that actually looks is yet to be seen. They're going to be implementing this from February of next year. It's been said they'll have a meeting on the first Tuesday of February, May, August, and November, and then 4 additional meetings in between at certain times. Now, with less frequent meetings, they're going to be a longer format.
The main benefit to them changing the frequency of meetings is basically having better data, because as we've seen with the inflation data, even the employment data, it can have a lag. With the mortgage data, they say that there can be up to a 3-month lag between when interest rates increase to when they're actually felt, because it takes a month for the bank to increase interest rate, another month for them to increase the repayment, and then another month for it to apply on the actual home loan. So that's where these monthly meetings where they're increasing rates and looking at the data from last month isn't really accurate, because it's from a few months before.
And I think the less frequent meetings will also help, because we know a lot of people fixed in during the pandemic. So there is even further lags. Maybe it's taking 12 months because a lot of people are still fixed in, and those fixed rates are only ending in the next few months. So I think the less frequent meetings might help the Reserve Bank to make more informed decisions. The flip side of that is, if there's less frequent meetings, it might mean they have to do higher rate rises. So instead of the 0.25% we're seeing each month, maybe they have to do a 0.5% increase. But it means that when they make the decision, they're more informed, because we see with things like CPI numbers, unemployment numbers, if they're getting them monthly and making decisions monthly, maybe it's too soon, and having that 8 monthly meetings means there's a little bit more time between the meetings. And I guess the last thing out of the Reserve Bank's recent review is they're going to be updating the code of conduct for board members, and it'll be reviewed and strengthened to prohibit members from trading interest rates or foreign exchange derivatives. Now, Jaden, I don't know about you, but I would have thought this is something that's already happening. So when I saw this come out of the review, I was a little bit shocked, because at the moment it sounds like maybe that is something they can do.
Well, and you'd hope that they're not actively trading this, because as you can see, anytime the board reviews interest rates, puts interest rates up, it has a direct impact on the Australian dollar. So it's interesting that they have to formally review this. There's been no evidence of misconduct at this point, but it's good to see they're updating that.
And the other thing they're going to do is make the votes public. So at the moment, I think there's 12 board members. They vote, and obviously the majority wins, whether it's a raise in cash rate or it's holding or getting reduced. So making those votes public will be even better, because there's more transparency. We know what each of the board members are thinking.
So from what the Reserve Bank is saying, the current deputy governor is going to become the governor. So at least there's some stability and potentially some continuation from there, and with current thought processes of the board. There are going to be a lot of changes. So it's going to be interesting to see when they're publishing votes, and you're going to see, well, is that member pretty pro getting inflation down, or what's their situation? I think that's going to be probably criticized a bit more than obviously what it is now, because we don't understand who's voting for what. But hopefully it's going to be steady as she goes. There's not going to be any major changes. It'll be interesting to see what happens with next month's Reserve Bank meeting. There is a lot of calls saying potentially the rates will go up in August. So let's wait and see.
Did you know here at Hunter Galloway, we're a mortgage broker and deal with people Australia-wide. So if you're needing assistance, we can help. There's no cost for the service and you can reach us directly on 1300 088 065 or visit our website, fill in a contact form and we'll get in touch. huntergalloway.com.au. Guys, thanks for watching. Leave a comment down below. What do you think the Reserve Bank Governor, Michelle Bullock, will likely do with her new appointment? Is she going to go hard and increase interest rates straight away? Or do you think she's going to be steady as she goes, as Jaden sort of said, and wait and see for more data to come through? Thanks again for watching and we'll see you next time.